It's just been a couple of months since Croatia joined the euro. How has it been? Have you noticed any detectable difference now that Croatia is part of the Eurozone bloc?
Well, I would say that the transition itself went very smoothly, without any problems, and people are now gradually getting used to a new currency. Although one should also say that Croatians have been quite used to the euro before, because we have been using it, people were saving in euro, we are a touristic country, people have been exposed very much to euro before, but still in everyday life it's a change to which people are adjusting. In terms of the economic benefits, we reaped them already before we got into the Eurozone, basically since 2020 and start of the pandemic crisis, when we were already on the road to the euro. We entered the exchange rate mechanism in 2020 and the banking union, close cooperation with the ECB.
Yeah.
And since then we saw the reduction in the risk premium for a country and gradually markets pricing in the fact that we'll get in, which is reflected in the interest rates in the markets and also in the domestic banking market in terms of the corporate cost of borrowing or the household cost of borrowing. So this has been basically already more than 2 years that we have been feeling the effects of entering into the Eurozone being positive for Croatia.
Well, one of the big issues facing the Eurozone right now are extremely high levels of inflation, and even though they have started to drop, there's signs that core inflation is proving to be quite sticky. How is the situation, first of all, panning out in Croatia?
Well, it's the same. The headline inflation has started to come down, and core inflation, underlying inflation, proves more resilient, sticky, and we are just at a bit higher level of the inflation than the Eurozone average, as the Central East European members of the Eurozone are, because of the different composition in the first place of the CPI basket, where the food and energy consist of a higher proportion. But the trend is exactly the same.
And because of that, the ECB have been tightening quite aggressively. They've been tightening in clips of 50 basis points at a time. Do you think we're getting to the point now where the ECB can perhaps move to smaller increments, not necessarily continue to hike in 50 basis points, but can actually go a little lower with 25 basis points now?
It is possible, but going into the next May meeting, we still wait for more data to come, and I think it will be, as we say, data dependent on what we will decide to do in the May, whether we stick with the 50 basis point or we move down to 25 basis points.
What is the main data you're going to be watching out for?
I think one thing that you also have to keep in mind is that we have then 3 monetary policy meetings in a relatively short period of time, May, June, July, which will in the end be the path of the interest rate rises over the relatively short period of time. And what we are looking at are basically of course, primarily the inflation prints, both the headline and core inflation or the supercore, all other basically indicators of the underlying inflation pressures, but also the indicators of the real economy, how strong is the economy, how strong are the labor markets, and from that we derive the expectations.
I've heard that from some of your other colleagues as well, and I just do wonder, the emphasis on the inflation print, particularly the core inflation print, is the one that comes up because it hasn't really peaked yet. It's moving in the wrong direction. Isn't that a backward-looking indicator?
No, I don't think. I mean, what we have seen with the underlying inflation and headline inflation is exactly what we expected to see. That the headline will start to come down first because of the energy prices coming down and the base effect from last year at the beginning of the aggression on Ukraine, and that the core inflation will become stickier. And this is what we are seeing at the moment. It's like you have the impulse coming from the increasing of energy prices and the food prices, which then filters through the economy. Then you have a second round effect because people want to make up for the lost purchasing power, wages going up, and what we've seen also and has been highlighted more recently is that the margins, profit margins, the gross surplus of the corporate sector remained very, very strong. It has also contributed to the inflation. So that means that we are still in a situation where we might see difficulty in bringing down the underlying inflation quickly back to the target, but we will have to see in next readings where it's going to...
Are you leaning towards a 25 or 50, you personally?
At the moment, I would like to see first all the data as we get into the May meeting, and I think it's going to be a close call.
What about the tightening of financial conditions? Have you seen a material impact from the banking stress in the last couple of months on financial conditions?
I don't think that the banking stress that we saw has resulted in much of the financial tightening in Europe at the moment. Yes, the financial stress indicator went up a lot during the height of the crisis, particularly with Credit Suisse, but it's now coming down also very quickly. And compared to the US, I see less of an effect of the banking sector turmoil on the financial conditions in Europe. Yes, financial conditions are tightening. We see that the banks are tightening lending standards, but that has started before we had the banking turmoil, and has different causes than the banking turmoil itself. So from the banking system problems, I would not expect for the time being, or we're at least not seeing any clear evidence that there is a significant tightening of the financial conditions.
ECB President Christine Lagarde yesterday said that there are downside risks still to growth. If those were to materialize, would that stop the ECB from further interest rate hikes because of concern about the impact it's going to have on the real economy?
Well, certainly the lower growth works the way of also creating the conditions in which the inflation pressures would be lower. And if that materializes, that would definitely impact also the monetary policy decisions. But let's see if anything like that happens. Of course, uncertainties are still high, but they are then lower than they were last year. When we met here in October last year, uncertainties were higher, and the outlook looked worse than it does at the moment. Fears of recession, of the possibility of the energy rationing, if you remember, that we discussed last year here, that has gone. So I would say that kind of conditions for soft lending have improved, but the uncertainties are still relatively high, though lower than last year, either at the spring or the autumn meetings.
Do you see any possibility that the Eurozone could go back into a recession, or go into a recession, because it didn't go into a recession?
It's not excluded, but at the moment I don't see it as a baseline scenario, definitely.